Thank you for coming and welcome to the Family Wealth Forum today. I know it's a very popular event, so thank you for your patience and consideration. We see the needs, so we'll definitely do better and making sure that we have more opportunities just like this one to help you with your financial planning. Are we good with sound? I just want to make sure. Okay. So again, this is the Assessor-Recorder. So Office of the Assessor-Recorder is one of the department in in the city and county of San Francisco, and we are overseeing the valuation of over 210,000 parcels within the city. So it's pretty amazing that our city is not too big, just 7 by 7 miles, but we have over 210,000 parcels in the city. And each of these parcels would need to be assigned with a value in order to calculate the property taxes that the property owners need to pay. So that is the job of our office. We are responsible for assigning that value based on market analysis. So a little bit of a question for the day. Does anyone know where does the property tax that you pay or your family pay goes to? Anyone? That's correct. Any like bigger items people can think of? Yes. So typically, about 64% of our property tax income goes to city services. So that goes straightly to the city and county of San Francisco, and we fund a lot of things, right? You know, the libraries that you go to, the recreation and parks, recreation center that you go to, the park that you might spend time with your family. All those needs to be like maintained and by our city services. So we have public safety, firemen, firefighters, and policemen. They were all also funded by city services. So about 2/3 of the funds is going to our city services. And then people might not recognize, but 35% of them actually go to public education. So that goes to this community college, like our city college, or our K-12 public education. So noted that a portion of that 35% is strictly going from the city to the San Francisco Unified School District. But there's also a bigger part that goes through the state. So the money goes through the state first, and then state has their own formula to kind of trickle down to the different school districts throughout the state. And then that 1% that we have left is supporting BART and air quality services. Before we get to that, does anyone know how much property tax revenue we get in the city? Just take a guess. We have 210,000 parcels.
Billion?
Billion? A little bit higher up. Anyone want to guess? Oh, yep. We actually collect about $2.7 billion every year from $2.7 billion for our property. So it's a big income for our city, and it's actually one of the most important and one of the most stable income for us, because property tax would come in every year. It's not like sales tax where it has it ups and downs and stuff. So property tax is definitely a big and very important sources for our city. But what goes into this property tax? Let's take a look. So this is the very basic formula on how to calculate the property taxes. So you see here that we have the assessed value. We also multiply that by our tax rate, the city tax rate, and then we add on some special assessments and fees and liens, and then altogether, then it becomes what you see on your tax bill, which is all the property tax that you need to pay. So even though the formula is pretty basic, it's actually including a lot of work of different departments. And I'm going to go through that because it's important to know if you have a question on the different parts of this formula where you go to. So first, the assessed value, of course, as our name indicated, it's us, the Assessor-Recorder. We do the assessed value. We value that property, and then we'll give it a number, a value, so that we can calculate what's the property tax end up would be. And then the tax rate is actually not set by our office. The tax rate is set by the city's controller. So the controller is basically an auditing kind of agency in the department in our city, and they would calculate and see, oh, this year I have that much expenses, so how much do I need to add on to that tax rate in order to collect enough money to sustain all these expenses? So the state government say you have to collect at least 1%, but then on top of that 1 point something percent you would see on the tax bill, the point something is what we add on locally to sustain our services. And then we have this whole new chunk of kind of money that we might need to pay. And what are they? They are usually things that our voters put on the ballot and say that we are willing to tax ourselves in order to sustain those services. So those most of the times are bonds and stuff. So they go through the whole election process, and then our voters decided that we want to self-tax ourselves basically to pay for those services. And the most common ones that people know is the San Francisco school districts. There are 2 of them, and they are sustaining teachers' quality, usually supporting teachers or facilities. So schools and school-related kind of buildings. And then at the end, you get your tax bill, and that tax bill is coming from our elected treasurer. So the Office of the Treasurer and Tax Collector's Office, they put all these together into a nice bill. They calculate all the taxes, they add on different things, and then they send that bill to you. And that's also the same department that you will be paying that taxes for. So remember, if you have a question of your value, you go to us. But if you have a question about your tax bills and the different things on it, and you're figuring out if it's the tax rate is right, then you have to go to the different offices to find out. So very quickly, so when you read your tax bill, the part that would be related to our office would be this part. So if you have any questions about this little box on the top right-hand side, then you come to our office. If you have a question about the tax rate, you would go to the controller. And if you have questions about this whole thing, they have a number for each of them because they are usually administrated by different offices or different departments. And they are the add-ons that I talk about, like that go through the election process and stuff. So these are the common ones that we would see, and you have to talk to them. And then the last thing is, of course, you have the final kind of amount that you need to pay, and that you pay to the Office of the Taxpayer and Office of the Treasurer and Tax Collector's Office. So kind of a very, very, basic kind of go over about, where to ask your questions. I'm going to take questions.
What number do you call?
You would see it on your tax bill. Yeah.
It does not say we assess. What number would I call?
Oh, for assessor's office, you can. You can call 311, which is our city hotline. So city has a hotline called 311, right? Yeah, you can call 311, or our office also have our own line. It's 554-5596.
If I have a question on reassessment.
On reassessment, correct.
Repeat the number again, please.
554-5596, and I'm going to take question after the presentation if I can. Sorry, I'm gonna just want to make sure that I cover everything. Okay, so one thing that I got asked a lot when I go out and do community education is what is Prop 13. So Prop 13 is a law that was passed in 1978, and it's basically a law that passed to protect homeowners on their expenses on property taxes. So just imagine that before 1978, people need to pay property taxes according to the market value of the property. So which means 1 year it can be low, the second year it can be double. Just like the recent years that we've seen, the market value was really fluctuating, right? So it becomes very difficult for the homeowners to predict what they need to kind of save up for their property tax expenses. So, and of course, those are also the years when the market goes really quickly. So people were feeling like, oh my God, I'm paying double as much as last year. So what can we do about this? So they passed this law in 1978 called Prop 13, and that is to say, if nothing changes, there's no construction, there's no name change, nothing changed on the property, your assessed value can only go by 2% every year. That's top. So most of the time, it's actually not even 2% because it's by CPI, California Consumer Price Index, but at most it's 2%. So here I did a little table to explain that better. So let's say first year you bought a house and it's at market value of 400K. your assessed value, we assess according to market value at the time of change of ownership. So we assign the value of 400K. You're paying property taxes is about like 1%, a little bit more than 1%, but let's just say 1% for now, then you're paying like $4,000. Second year, your property went up and it might be at the 500K level. However, because with Prop 13, you're protected on your assessed value, so you are actually paying only 2% more. So you're at 408,000 at that time, and you're paying about $80 more. To the third year, the market is doing really, really great. Your property actually went up quite a bit, and it's at 600K. But again, Prop 13 protects you. So your assessed value, the value that you actually pay property taxes on, is at 416. And you're still paying just a little bit more than 2 years ago when you got the property. So that explains why when a lot of people come to me and say, hey, my neighbor, we have the same house, kind of same layout, 2 bathrooms, 2 bedrooms, you know, and a very nice kitchen, but she is paying just half of what I'm paying. So why is that? And that's because of Prop 13. So it's not so much about the characteristic of the house. It's more about how long you have owned it and when did you buy it. And if you bought it at a very low market, your assessed value will be kept pretty low. And then as you can imagine, real estate market usually only go up during a long period of time. So usually the longer you own the property, your assessed value and your market value would be very different. Like it would be probably much lower most of the time. So that comes to this graph that I'm trying to like visualize what I'm talking about to you. So here at the darker blue little house icon that we have, that's the Prop 13 value that was of the old owner, the former owner. If that place got changed hands to another person, the new owner will be paying at the market value at the very first year. And then that new owner will also be protected by Prop 13. So from then on to 700K, she's protected onwards. But there's that gap in between, as you can see, if the house got changed hands. So that also then brought us to this next question about, if I want to pass on my house to my child, does that consider a change of ownership? So going back to here, if you are the owner and you are thinking about passing on your property to your children, which is the new owner, and that to answer that question, yes, if there's a name change on the property, it's considered a change of ownership. Even though it might be within the same family, as long as we see there's a name change of the property owners, we consider that a change of ownership, and which means that would trigger reassessment to market value. So without thinking much, the owner will be paying at 400K and then all that, you know, kind of like a lower value, and then the new owner will be paying at that. However, one thing that you should know about is Prop 58. So Prop 58 basically say that, yes, we recognize that it's a change of ownership from a parent to a child or a child to a parent, but because of that relationship, we are able to exclude that reassessment. So basically, you are able to pass on that property along with this assessed value to your children. So they don't need to be reassessed and paying at a higher value. So this is pretty important for people who are thinking about maybe like passing the property to their children, to make sure that when you really decide to do that, to add their names onto the deed, or just, you know, proceed with that change of ownership process, then Prop 58 is a form that you want to fill out and also be actually be submitted to our office. Best along the time when you're doing actually the change of ownership. So if you're recording the deed, might as well do that at the same time. So
You mean while I'm alive or when I'm dead?
This is when you're alive, but even after you pass away, when your children inherit it, they can still submit this form as well. Yeah. But we're talking about kind of planning now, so that's why I'm saying that when you want to submit that deed for recording, then you want to also submit 58, because Prop 58 is not automatic. So you have to kind of make sure that you submit it to indicate that family relationship to us.
So if you passed it on as an inheritance and your children didn't know about Prop 58, then they are subject to the increase.
It can be, yes. Yeah, so they should know about this.
How about if we already do a living trust to the children?
I'm going to take questions afterwards, so I'm going to take that later on. But quickly about eligible child. So under this program, there is, so that's why I'm prepared some handouts for you guys, so you guys can take these. It tells you what's the eligibility is for, I'm going to give you these. So for eligible child, it can be your biological child, it can be your stepchild, child adopted before the age of 18 also consider your child, and also your son-in-law and daughter-in-law, just to keep in mind, those are also legally considered your child under this program. Eligible transfer, so basically that covers most of the transfer, I would say. Anything from a sale or a gift, an inheritance, or transfer via trust would also be considered eligible transfer. Property. So property, it's interesting to remember that your principal residence, the one that you live in, that has no limit. So no matter how much that assessed value is, you can pass it on fully. So if it's a million, then you can pass on $1 million in your assessed value. If it's 2 million, you can pass on 2 million as assessor if you're principal residence. If you have another property other than your principal residence, every person, as a person, you have a $1 million limit on your assessed value. So you have that quota that you can use for 1 million for any property that's not your principal residence. And then Prop 58 is interesting because it's both ways. So most of the time we might think of like just parents passing on children to children, but actually children, if you're interested in passing properties to a parent, you can also do Prop 58 as well. It's both ways. And then this is something that I usually bring to people's attention because transfer on death deed is something that pretty new. It was passed in late 2015 and was effective in 2016. So basically it's recording a deed with the function that you can say who I want to pass this property to after my death. And that allows you to avoid probate. So as many of you might know, California has probate laws, which means that if you don't have anything that's clearly indicate how you want to distribute your properties, the court will come in and decide kind of for you. Or based on the information that they would have it's a court proceedings to decide how to kind of divvy up your assets. So from what we have heard, it's usually a pretty long process. It takes up to months or years, and it also have costs associated with that. So if you have been into the other estate planning workshops, you would know that it's something that most families want to avoid from going through probate. So the transfer on death deed would have that function. In that, basically, it's a deed that says that me as Vivian, I want to pass on this property after my death to my beneficiaries, and who are they? So it's just recording one deed at the recorder's office. So depending on where you live and where your property is, you want to record that with your county recorder. And it's recording that deed is just like any other deed, so it's probably just about like maybe $20 or so. So it might be something an option that people might not have the money now to create a trust or create a will. It can be something that helps you to pass on property, but it can only used for residential property, I think.
Do you have to use 458 also?
What's 458?
One you were talking about.
Oh, 58, yes, you can use that, but then that would be your children or your beneficiary, right? Yeah, because then you would pass away already by the time that it's actually get into effective. So I have some information on that. I think this is something that may be new or something to consider. So I'm gonna just pass on these two flyers. One is just an instruction on how to fill out that TOD form, and then one is just what is this about. So, and if you need more information, a lot of the information is on this really amazing website called the Sacramento Law Library, and you can find the actual deed, and I have some extra copies of the actual deed if you want to take a look at afterwards. So if you consulted your attorney or CPA, who you trust for on planning your finances, and they think that it's also a good idea to do it, the process is pretty simple. You just fill out that deed, and then you go to a notary, and then notarize that form, And then after that, within 60 days, then come to the county recorder office to record that. And then you would have that, will have that deed on the record of your property. Okay, so after that, there's also another program that I think is pretty interesting for people to know about, and it's for seniors. So a lot of the times I also get asked by this question is like, if I want to move to a new place for whatever reason, maybe I have a really big house, my children, they all got married and they moved out, I don't need that much space, or I want to actually move to a place that has public transportation. I don't want to live in a 2-story house anymore. I want to live in a flat so that it's more convenient for me. All that reason, can I still keep my current assessment? So if I move to a new place that is more suitable for me to live, can I pass on my assessed value from the old house to the new house? The answer is yes, but you have to be able to qualify under this Proposition 60 program. So it's designed for seniors. And to keep in mind, a lot of, I would say, public programs, the qualification for seniors might be 65 and above. This program is actually 55 years old and above. So you might want to, it's actually lower than most of the programs that for seniors. So if you're 55 years and older and you live in a house that you want to, not a house that you don't want to live there anymore, and you want to look at a new house to buy and move there, then it has to be your principal residence. So it's not anything, it's your house. And Prop 60 is a one-time program. So it's one time in your lifetime. So you can only do it once. And then you have to buy a house that is equal or lesser of the current market value of your old house. So we're talking about market value now. So you're buying something that is either equal or less valuable. And then you can pass on that property to it. And it has to be within 2 years of sale. So if you sell your house today, then you have to be able to purchase that new place within 2 years. So that's just how the program works. And again, I have another, I think I passed it on, right? Did I? Oh no, I have it here. So I'm gonna pass these out too, because there are more details about the program if you wanna see. But basically, if you wanna make sure that you fit under the formula, you would want to take a look at the second page. There's a formula for you to calculate if you qualify for this program. Because there's a slight inflation allowed under the first year and then a second year. So you want to definitely pay attention to that. And then I want to talk about other tax saving opportunities, because a lot of times, even though people have become homeowners for a long time, they might not be aware of these programs. So first of all, the homeowner's exemption. I have seen people who come to me that they have purchased a place for 30 years and they live in there for 30 years and they still don't know what that is. It's not a huge tax discount. It's basically taking $7,000 from your assessed value. So you're saving about maybe $70 to $80 per year. But the good thing about this program is once you enroll, it would be enrolled forever. So until you sell the house or you drop out from it. But basically, it's auto-enrolled every year, and you would get that tax cut every year. It's about $70 to $80. So if that's for your principal residence. And that's with our office. Homeowner's exemption is with our office, the assessor's office. There's other stuff that also allows you to have a little bit of a tax cut. It's the San Francisco Unified School District Senior Parcel Tax Exemption. And that's remember when I show you that tax bill? That center part where there's like a couple of items that were added on to your tax bills. There are 2 of them that are associated with the San Francisco Unified School Districts. And if you are a senior, and I think I have a form here, if you're a senior and you're gonna be 65 years or older, you can apply to exempt from those taxes. So I have some forms here if you're interested in looking. And in the past, this program, you need to file every year. So even though you're 65 and you're not getting any younger, they still requires you to file it every year. But starting from this year, they stopped that. it's going to be auto-enroll from now on. So if you receive your benefit this year, you don't have to worry about filling that form next year because it will be automatically given to you. And then the last thing is seismic retrofit exclusion. So maybe a lot of people would hear about like soft stories nowadays. Anyone know what soft stories are? But basically, it's a city mandatory program for buildings that are considered unsafe during earthquake. They are required by the city, and it's a mandate that they have to fix it up and to make it safe to live in. So any kind of construction, if they are seismic related, so if their purpose is to reinforce the house and make it safer to live, that part of the construction will be exempt from reassessment. So so if you are thinking about, oh, I'm going to be adding a bathroom, I'm going to be adding a bedroom, that is not considered just seismic retrofit. But if during that whole construction, there are certain parts of it that you actually strengthen your foundation, or you kind of did something to make it more safe to live, there's a seismic retrofit exclusion. So that part of the construction would not be reassessed. Okay. And I want to make sure one thing is that's something that people always ask me in terms of new construction. When you do a new construction, it's only the improved part will be reassessed. So it's not your entire house. So if you add that room, it's going to be that room. Or you add that kitchen, it will be that kitchen. Or you converted that garage into a living room, then it would be that part. It's not your entire house would be reassessed. Okay, so here's our website, and a lot of our information, the fact sheets that I've given you are on our website. If you have questions, you can feel free to call 311. Our response time is usually between 2 to 3 days, and it has, if you speak different languages, you can feel free, there will have always someone 24/7 can serve you in language. So thank you so much. I help you learn something. There's more information here, and there's like TOD. Oh, thank you.